Breaking news from Tokyo. The Japanese stock market just had a massive rally that caught many investors by surprise. The Nikkei 225, Japan's most important stock index, surged more than 1,100 points in a single trading session, pushing it back above the 57,000 level for the first time in roughly a month. This is a significant move, especially considering the global uncertainty surrounding tensions in the Middle East. So what's driving this sudden burst of optimism in the world's fourth-largest stock market? And more importantly, what does this mean for your portfolio? Let's break it down. Let me give you some context on why this matters. The Nikkei 225 had been struggling for the past several weeks, weighed down by concerns about how rising tensions involving Iran could impact global trade and Japanese corporate earnings. Japan, as you might know, is heavily dependent on Middle Eastern oil imports, so any instability in that region directly affects Japanese businesses. Yet despite this cloud of uncertainty hanging over the market, investors came back in force today. The index didn't just edge higher. It exploded upward by more than 1,100 points at its peak. That's the kind of single-day move that makes headlines around the world and signals a potential shift in market sentiment. Now here's where it gets interesting. The catalyst for today's rally wasn't some government stimulus announcement or central bank intervention. It was a single earnings report from a major Japanese apparel company. On the 9th, this retail giant released its quarterly results, and the numbers were impressive. Not only did they beat expectations, but management also provided optimistic guidance for the coming quarters. In Japan's corporate culture, companies tend to be very conservative with their forecasts. So when a major player expresses confidence about future performance, investors pay attention. Buy orders flooded in, and the positive momentum spread across the broader market. This is a classic example of how one bellwether company can lift an entire index. But let's not get too carried away with the optimism just yet. The underlying concerns that have been weighing on Japanese stocks haven't disappeared. The situation involving Iran continues to create uncertainty for global markets, and Japan is particularly vulnerable here. Unlike the United States, Japan imports virtually all of its oil, with a significant portion coming from the Middle East. Any disruption to energy supplies or spike in oil prices hits Japanese manufacturers and logistics companies hard, squeezing their profit margins. Many analysts are warning that while today's rally is encouraging, the fundamental outlook for corporate earnings remains clouded. Investors should be prepared for continued volatility in the weeks ahead. So what should you take away from today's action in Tokyo? First, it's a reminder that Japanese stocks can move sharply in both directions. If you're invested in Japan or considering adding exposure, be prepared for this volatility. Second, the consumer and retail sector is showing surprising strength. Despite all the doom and gloom about the Japanese economy, domestic consumption appears more resilient than many expected. Companies with strong brands and solid execution are still finding ways to grow. Finally, today's rally needs confirmation. One day does not make a trend. Watch closely over the next few sessions to see if buyers remain committed or if this was just a temporary bounce. Thank you for watching Japan Business Insider. Hit subscribe and the notification bell so you never miss our daily updates on the Japanese market. See you in the next video.